Hey, what is up guys? Welcome back to ProTraderPath. I'm back with another video, and in today's video I'm going to talk about a few things. Okay, so here is a video where ICT is talking about risk to reward. I heard a lot of people saying I don't really care about risk to reward. I don't care. Why I don't care is because I know where the market is going. I know where to target. If I'm profitable this many times, why should I care about risk to reward? But what ICT is talking here, growing a small account without high risk. Okay, let's talk about this. Where this is coming from? Mentorship 2, month 2. Okay, now month 2, did I recommended you to watch it? No. Why? Because I'm already talking about this shit. Okay, you guys need to know a very few things regarding what I'm saying here. So let's talk what I'm saying here. Okay, what you need to avoid: don't try to rush and try to make massive gains either in pips or percentage return. I saw a lot of people is showing the pips. I target 20 handles, I target 15 handles, I target 10 handles, or the stop loss should be less than 20 handles, this, that. I heard about it. I know a lot of you guys are used to looking into those sort of things. Look what ICT is saying here. Try not to gain or rush to make massive. Okay, I'm gonna read these points and I'm gonna come back to the point where ICT is talking about risk to reward. Don't open yourself to large risk in hopes of equally large return. Have you saw some people having huge stop loss and smaller take profits, or maybe similar amount of take profits? Is it optimal for your account? Did I talked about it? That if you lose your money, how you gonna return it if you don't have a risk to reward ratio? Better or good risk to reward. Don't assuming taking a small risk and that will not grow your account. What I talked about in my every single video where I show you guys my trade execution, that I risk 1% or even less. Okay, now I have a lot of videos recorded that I wanted to share with you guys, but unfortunately I am too busy to actually show you guys those. Okay, this is my TradeOvet account that I'm trading. Okay, you see my entry, you see my stop loss. What I talked about, just look, the line that I draw, 15 minutes breaker block. Where did the price came? Here, after taking a lot of liquidity. You see the Thursday high was marked. This is Friday, like last week when I took my last entry, and if I'm not wrong, I will have the days and times. You see here, like 17th November on Friday. So this is where I have these things recorded. Okay, and I wanted to make the video. You saw I just moved it here when I saw price went above a certain level. I'll talk about it later, but just look, market went there. I took my first partial over there without even considering anything else. The second partial I put here. Now let's see what market did. Market gave me the take profit, and after that market started showing some sort of reversal or whatever it is. I don't really care what market does. I have talked about it over and over again, and look where I targeted and what I targeted. So don't you think that my stop loss here and take profit, one here, one there, would have given me good enough take profit over there, like good enough profit over there? That's over $900 profit that I made on that single day. Okay, so 900 US dollars may not sound a lot to you guys, but it's a lot to me. Okay, like if I convert that in Australian dollars, that's a huge amount. As simple as that. I have earned $1,000 a day lot of time. You see, like 1.7k in profit. I have so many things, you know, like Silver Bullet, PM Silver Bullet, Silver Bullet. A lot of videos I have recorded, but I'm not getting enough time to post it. I'm sorry regarding that, but as I'm saying over and over again, you need to have a good risk to reward in terms of growing your account. Forget what others says. Now what you need to aim for: determine how realistically anticipate a favorable risk to reward model. Just look, what you need to aim for. The first number one thing that ICT mentioned, that what you need to aim for is a favorable risk to reward model or reward to risk model. Now learn to respect the risk side of the trade setups more over the reward side. Identify setups and permit 3 rewards multiplies to 1 risk or higher. I will explain those in a different video. Now frame good risk to reward setups that have little impact if unprofitable. What I said about it, 1% or 2% that ICT is suggesting over here. Now let me go to the place where ICT is talking about risk to reward. Look, win rate. Is this something that ICT is talking about, risk to reward? If ICT is talking about risk to reward, why on earth you will listen to someone else who is talking about I don't care about risk to reward, when ICT himself is caring about risk to reward? With 75% win rate, this is what you minimum you need, right? 0.3:1. Why is that? Is because with 75% win rate, if you win 75% time of your trades, the 25% losses that you will see will be covered with this. But still, I don't think 0.3 is good enough, to be honest, even though ICT is talking about it, but I don't think that is good enough, because let's say like you are losing 25% in your 25% of losing trade. If you have a 0.3:1 reward, okay, that's 25% you are losing. But let's see what you can get with that. You can get 22.5% in your return as your profit. So minus that is actually negative 2.5%. So I don't think 0.3 is a good risk to reward. I think 0.4 can recover it. So let's see, 0.4 into 75, that's 30%. Yes, now you are in a profitable trade, or you are a profitable trader with 0.4%. I think 0.3 is wrong. Okay, see, like this is what I have been doing for long time. That's why I don't even need to calculate it beforehand. I can tell you straight away by seeing this chart. Now, is this a mistake by ICT? I don't think so, because what ICT was thinking here is maybe 0.33, because that will make you somewhat around the break-even trader. You see that? That's what makes you a break-even trader. Now, still it's not break-even, but I'm saying that will make you a break-even trader. But 0.4%, if you have a 75% win rate, that is what gonna make you a profitable trader, but not by a large margin, because you can see with 100 trades, if you win 75%, 0.4 will give you 5% gain in your account after every 100 trade. But there is a problem, there is a catch, because when you lose your money, your 1% will be like different amount for every time you lose with low risk to reward. So even with your 0.4 risk to reward ratio, you won't be a profitable trader. How you can be also there will be commissions and other stuff, so you won't see this 5% gains. Okay, this is coming from experience. I'm talking about experience. 0.7 with 60% win rate, let's see how it looks like. So you are losing 40% of your trades, and that is 40% loss if you risk 1% every time. So let's see, 0.6, it will give you 42%. I can like 0.7 into 60, that will give you 42%. So that is a 2% gain. Okay, like 42%, that is a 2% gain, and still it will be the same thing that I'm talking about. Now 50% with 1-to-1, it's giving you 50:50. It's not still good enough. 40% will 1.5. Let's see, like you are losing 60% of your trades, so you are losing 60. 1.5 will give you 60. So this is showing you a break-even trader, but I don't think that is possible here either, because what gonna happen is when you are losing 60% of your trade, your account, what does it mean? losing 60%. That every 10 trades you take, you lose 6 of them, you win 4 of them. Or every 5 trades that you take, you win 3 of them and you lose you win 2 of them and you lose 3 of them. So when you lose 3 of your trades, you are down by 3% on your account, and the 1% that you are risking for your profitable trade, the amount is getting smaller. So to become a profitable trader, you will need either a higher win rate than 40% at this risk, or you will need a higher risk to reward at this win rate. Okay, the reality of risk to reward ratios. Okay, let's see what ICT has to say. Although I came very far from the video and it's going to be a long video, that's why I'm gonna make it as short as possible. So let's see.
Loss. When they first start out, everyone's Superman. They can't go wrong. Their system's going to be the best thing since sliced bread. Don't worry about it. You'll never have a loser, kid. No one starts in this industry with that as a hit the ground running. You never have any losing trades. You're going to encounter that. So when we talk about accuracy, accuracy is not even necessary in terms of high-end accuracy to make money. You don't even need high accuracy to build wealth, but you do need time. Time is the missing element, and that's the secret. That's the holy grail to allow compound interest to do its magic. So my question to you is this. Do you think that you're a 75% win rate trader? In other words, every trade you get in is 75% of those trades winners. If that's the case, your win at 75%, that is actually very high. And your ratio terms of what you're hoping to make in terms of your risk, it's really low. You don't need to have very much in terms of risk to make $1. If you had 60%, you have you have less in terms of what you have to take on as risk to make $1. But when we get to 50-50, you got to start risking $1 for $1. Then at 40%, the ideal ratio would be you're trying to make $1.50 for every $1. To be profitable when you're only 33% accurate, ideally the minimum is you want to be looking for trades that pay you $2 for every $1 risk. At 25% accuracy, now folks, think about this. If 75% of the trades that you take are losing trades, the minimum ratio for profitability is you have to look for trades that pay out 3-to-1. Now, think about this for a moment. If we look at the low end objective in terms of accuracy, that means 25% accurate. We're looking for trades that are going to pan out, hopefully, $3 reward for $1 risk. So if we have that scenario and we are able to take a trade and risk $1 and make $3 in return, we can be wrong 75% of the time and still be net profitable. Now think about that. If you grow in your understanding of the things I'm teaching you, say you become profitable to the degree where half of your trades are profitable. That means the ability for you to find 3-to-1 trades more than doubles. It more than doubles. So that means your accuracy grows, but your reward to risk ratio, if it just stays 3-to-1, you're going to have more trades that pay out 3-to-1. Therefore, your equity is going to increase exponentially. Now, what happens when your win rate goes up above 50%? What happens if you have a 65 to 70% accuracy and you're looking still for 3-to-1 trades? Your money grows exponentially. What happens when you start looking for reward to risk ratios of $5 paid out for $1 risk and you have a 70% accuracy? Suddenly, wealth is not that far out of reach.
Anyway, so I'm gonna stop my recording here, okay, because it's going to be a very long video. But whatever I have talked about in my channel, I have gave you every single thing with proof that ICT himself is talking about it. Okay, so yes, I mean, if you want to learn this, follow me. Okay, and avoid looking for entries in so many things. All you need is a proper fair value gap entry. That is good enough for you. Okay, that is good enough for you. You don't need to know order block, breaker block, rejection block, liquidity void, volume imbalance, things like that. Okay, yes, it's good to know all those. Everything that I'm showing here or suggesting here or talking about on my channel is coming out from ICT. Okay, and stop watching the 2022 model, start from the Scout Sniper, then go for the Market Maker Primer course, or if you don't like those things, watch at least once all of those, try to memorize or take notes as many informations as many you can from those things, and then start from the core content month 4 to month 9. Okay, everything you need to know I will be providing in my channel. Okay, so until next time, take a very good care of yourself, your health, and your family as well. Take care. Bye bye.